good morning, good afternoon, or simply good day, depending on where you're joining us from. Welcome to the first webinar featuring the BAF Future Leaders class of 2026, the 11th class of the program. My name is Daniel Pinho, and I oversee the BAF Future Leaders program. Last year, BAF launched this webinar series to give project teams the opportunity to share a deeper discussion of their white papers that they presented at the BAF Global Annual Meeting. These webinars are free and open to both members and non-members. Just a couple of housekeeping. The webinar, it's muted. Everyone is muted to reduce any noise or distractions during the presentation. The video is also turned off for everyone except our speakers. The webinar recording will be posted after the session. And just in case, please use the screen navigation options to ask questions. Use the Q&A to submit your questions in text, or you can raise your hand under the reaction box if you want to ask a question verbally, and we will unmute you. The response to this year's webinar series has really exceeded our expectations, which confirms that these topics are highly relevant to the industry. Each year, BAF councils submit potential topics, and the board selects those that the future leaders develop into white papers. We're pleased to begin this year's series with a timely topic: Agentic AI use cases in transaction banking. The team's white paper is available for free of charge to BAF members into the online store under management, member tools, and future leader white papers. Before we begin, I would also like to mention that BAF will open applications for the 12th class of the Future Leaders program in early August. Candidates cannot self-nominate. They must be nominated by their BAF member organization. The application link will be sent to each organization primary contact. If you have any questions about the program, please feel free to reach out to me. And with that, I'll start a video of the team.
Welcome to the desert of the real. We have only bits and pieces of information, but what we know for certain is that at some point in the early 21st century, all of mankind was united in celebration. We marveled at our own magnificence as we gave birth to AI. Need artificial intelligence. A singular consciousness that spawned an entire race of machines.
Norman.
Okay, good morning, everyone. Good afternoon and good evening. Thanks very much for joining us in this web conference. I know we can't see you guys, but hopefully you guys can see us. So my name is Omar Farhangyar. I'm from RBC. I'll be doing a quick introduction of the panelists. So with me on the Agentic AI group, I have Helen from Bank of China, USA. I have Marvin from Credit Agricole, Pepita from StoneX, Natalie from NatWest, Miriam from JP Morgan, Patrick Craigo from PNC. So with that being said, I'll start off by handing it over to Helen to start us off with a quick introduction of Agentic AI. Helen?
Thanks, Omar. Hi, everyone. Agentic AI is a buzzword for now, but what is agentic AI? The word agent comes from the Latin term agere, meaning to do or to act. Agentic AI thinks and acts like a human being, which is highly autonomous in solving a complicated problem by leveraging the large language model as a foundation and keeps improving a solution with a loop of continuous reasoning and acting. And how's it different from traditional AI? Think about your daily life, and you probably cannot survive without traditional AI for even one day. You use discriminative AI such as email spam filter, predictive AI such as Amazon or Netflix for recommendation, early natural language processors such as Siri and Alexa, and generative AI such as ChatGPT and Gemini. This traditional AI acts in a linear pattern, which reacts to one prompt with a one-time snapshot style response. Humans are embedded as a component since the system heavily relies on human input on the next step command. Agentic AI, however, such as OpenClaw, operates in a reasoning acting loop and solves complicated problems by decomposing high-level goals into subtasks: reasoning, acting, learning, and improving. A defining feature for agentic AI is its capability of interacting with the world by independently identifying and utilizing external tools, such as API and database, to retrieve real-time information and perform action that extends far beyond its original training data. As agentic AI is able to backtrack or improve dynamically based on interim results and real-time feeds, it can provide sophisticated human-like outcomes. Humans are orchestrator instead of components that builds and oversee the ecosystem of agentic AI. The ultimate goal of AI development is AGI, artificial general intelligence, a hypothetical type of artificial intelligence that can match or exceed human cognitive capability across almost any intellectual tasks. And driven by a mixed feeling of anxiety and excitement, global banking today invests $73 billion annually in AI technology and is expected to ramp up to about $100 billion by next year. There are roughly two types of agentic AI in transaction banking: narrow agents and multi-domain agent. A narrow agent is similar to a specialist, where it focuses on single topics such as KYC and payment investigation, with a feature of highly regulated workflow, easier control, and clear audit trails. A multi-domain agent acts like a generalist, which creates a holistic client profile across different business lines and provides trends, forecasts, and best solutions, which is mostly adopted by relationship managers and sales. In terms of strategy, financial institutions use a mix of build, buy, or partner. We're given constraints on reliability, speed, and cost. Most of the institutions we interviewed selected the partner route to customize existing third-party tools such as Microsoft Copilot as of now. But is the industry really ready? And what do they trust and doubt most about agentic AI? Let's have Pepita to review the industry's response through our surveys.
Thanks, Helen. So as part of our project, we surveyed over 50 professionals across transactional banking and fintechs globally to understand how the industry sees AI, where we are today, and where we are heading to. Starting with AI maturity, the screen ahead tells us a story. Over 60% of the organizations are already in development, and 15% are established. Interestingly, not one respondent mentioned that they haven't started. So the message is clear here. Agentic AI is no longer a future ambition. It is already happening while we speak. When we zoom into agentic AI, familiarity is still evolving. While most respondents have heard the term, many aren't yet using it or don't fully understand it. Currently, only 1 out of 5 actively uses, which means Whilst awareness is high, adoption is still at early stages. What is encouraging, though, is the sentiment. Nearly 80% believe agentic AI could have a positive impact on their day-to-day work. And where do they trust it the most? In very practical, operational areas such as KYC and onboarding, compliance and fraud, payment investigations, and client services. These areas were traditionally burdened with manual effort and stand out as immediate wins. But with enthusiasm comes with caution. 3/4 worry about loss of human accountability, and about 70% believe that data confidentiality and accuracy remain key risks. The message is simple. Adoption must go hand in hand with strong governance and controls. A key observation from our survey was while banks place greater emphasis on human oversight, fintechs tend to prioritize rigorous testing. Ultimately, for agentic AI to scale successfully, organizations must embed transparency, control, training, and accountability into their operating models to ensure trust and promote adoption. Across our surveys and interviews, a clear and consistent theme has emerged. Agentic AI is evolving beyond task-level automation to transform entire end-to-end workflows whilst we reshape banking operations. As processes become increasingly autonomous, human roles are shifting towards oversight, judgment, and deeper client engagement, with an estimated 30 to 40% of operational activity is expected to transition. The impact is less about job displacement, but more about job transformation. The industry is moving away from repetitive execution towards managing AI agents, handling exceptions, and delivering higher value, client-focused outcomes. We brought these insights together in our white paper to support you with your journey ahead. I'll now hand this over to you, Patrick, to share some of the user cases you've researched.
Thank you, Papita. So now that we've set the stage for what agentic AI is and how the industry is thinking about it, let's talk about where it can actually be applied in the transaction banking industry. Know your customer and customer due diligence are some of the most important control processes in banking, but are also some of the most operationally painful. They are document-heavy, manual, repetitive, and spread across multiple teams: relationship managers, operations, compliance, and risk. For many financial institutions, a single onboarding case can touch 4 or 5 different systems and require multiple handoffs before it is complete. Each of these handoffs introduces delays, inconsistencies, and additional operational costs. Now, for clients, this can be frustrating. They often submit documents, wait for review, receive follow-up questions, and are sometimes asked for information that they've already provided. For bankers, it slows down onboarding and creates friction at the very beginning of the relationship, just when you're trying to build trust. And most importantly, as bankers, the longer onboarding takes, the longer it takes for the bank to begin realizing revenue from that relationship, whether that's from deposits, payments, lending, or treasury services. So faster onboarding is not just an operational improvement, it directly impacts the time to revenue. This is where agentic AI can help. An AI agent can be leveraged to review those onboarding documents, extract that key information, compare it against improved and public sources, internal systems and public sources, identifying those missing items, pre-filling forms, and flagging those discrepancies for human review. Strong example specifically of this is with beneficial ownership. So let's think of a large multinational company with 100 or more subsidiaries. Once you layer in shareholders, directors, and other controlling parties, this quickly becomes a massive and very time-intensive undertaking. And this is not just a data collection exercise. Accuracy matters because it directly ties to regulatory expectations around transparency, control, and financial crime risk. Instead of manually piecing together ownership percentages, control structures, and government rules across multiple documents, an agent could map that structure automatically and highlight gaps or inconsistencies in real time. It could also query public registries, so think of being able to validate that information submitted by the client to ensure it's accurate. For example, if a shareholder appears in multiple jurisdictions with slightly different naming conventions or ownership percentages, the agent can flag that inconsistency immediately, something that could otherwise take significant manual effort just to identify. The key point is this: the agent is not making the approval decision, rather, it is preparing a cleaner, more complete file. So when it comes time for the human reviewer to review, it can make a faster, better informed decision in a process that has proven to be systemically important to the financial system. The AI agent improves consistency across all of those reviews by reducing rework and helping ensure that risk is being evaluated based on complete and organized information rather than fragmented data. The second use case that we explored in our white paper is around compliance monitoring and fraud detection. So today, many monitoring systems rely on static rules and thresholds. So for example, a cash deposit over a certain dollar amount getting flagged, or an incoming wire involving a high-risk country that would trigger an additional review. While these rules are necessary, they do also generate a high volume of false positives. So that means that teams are spending a significant amount of time reviewing activity that may not actually be suspicious. In some cases, investigators are reviewing those alerts that lack sufficient context, which makes it even harder for them to prioritize truly high-risk activity and can lead to alert fatigue over time for the teams reviewing the payments. This is where Agentic AI introduces the real value. Instead of relying on only those static rules, an agent can evaluate transactions with context. The agent can compare activity against the client's normal behavior, historical transaction history, industry patterns, geography, and other known risk indicators. This includes understanding what is typical for a specific client, so such as understanding the transaction frequency, common counterparties in traditional payment corridors, rather than applying that same threshold across all customers. So in a payments fraud scenario, for example, the AI agent can identify an unusual beneficiary, an atypical amount, or a payment that might be initiated at a very abnormal time for the client. All of this can be completed before the transaction is even released. The AI agent can also connect that anomaly to other known fraud indicators, helping to make investigators understand not just that something is unusual, but why it might be risky. This shifts the model from a process from a static screening model to a more dynamic risk assessment one. This capability, I do want to note, must be governed carefully. In banking, speed alone is not enough. Processes must be explainable, audible, and subject to human oversight. That is key. That means every recommendation or alert produced by the agent should be traceable, so that compliance teams can truly understand how a conclusion was reached and demonstrate that to regulators if needed. So across both of these use cases I just discussed, the value is not full autonomy. The value is better orchestration between processes. By reducing repetitive work, improving visibility into those exceptions, and allowing people to focus their time on decisions that truly require judgment. Ultimately, this is not about aligning technology with how banking works. It's combining automation with human expertise to improve both efficiency and risk management. Omar, can you tell us a little bit more about how agentic AI is being applied in the payment space?
Thanks, Patrick. Definitely, that was great. So I guess when we talk about agentic AI, we're not just talking about, sorry, guys, start my video. My apologies. Let me see if I can start my video. Okay, yes, okay. So when we talk about agentic AI, we're not just talking about chatbots or tools that answer simple questions. Agentic AI is different because they take a goal, break it down into steps, gather information from different sources, analyze the situation, and recommend the next best action. When it comes down to transaction banking, this is very relevant because many processes involve multiple systems, multiple teams, and time-sensitive client needs. The opportunity is not to replace people, but to help teams work faster, reduce effort, and improve the client experience. One of the first areas where agentic AI can be useful is in payments, both domestic and international. As you all know, payments go through many steps, including initiation, validation, routing, settlement, and reconciliation. For international payments, the process can become even more complex because there may be correspondent banks, different time zones, currency conversions, cutoff times, and different payment message requirements involved. An agentic AI could help monitor payment flows, identify the exception, and flag issues earlier. For example, if a payment is delayed, the agent could review the payment detail, check where the payment is in process, and identify where the issue may be related to missing information, routing, cutoff times, or another operational reasons. Instead of someone manually searching across different systems, and sometimes systems could be old, the agent could bring the relevant information together and provide a clear summary. That helps the team respond faster and spend more time resolving the issue rather than just trying to understand it. This connects closely to the second area, which is payment investigation, which is the area that we focused in on as well. Today, many investigations are very manual. A client may ask, "Where's my payment?" And the service or operation team may need to check multiple inundated systems, multiple old system, payment messages, internal notes, and back responses to find answers. With an agentic AI, the investigation process can become more proactive. The agent can collect the transactional detail, review the payment journey, identify where the payment is delayed, and suggest the next best action. For example, instead of only showing that a payment is pending, an agent can provide useful summaries such as the payment appears to be delayed because additional beneficiary information is missing. The next step is to request updated details from the client. Not only this saves time, but it also helps teams communicate more clearly with the client. It also creates a more consistent investigation process because the agent can follow the same steps each time and make sure the important information is not missed. Lastly, the area that's most important to us all is the client inquiries. As you know, client is the bread and butter of our industry. In transaction banking, client can expect quick, accurate, clear answers. They may ask about payment status, account information, onboarding requirements, service capabilities, fees, cutoff times, or reporting options. An agentic AI can act like a digital case manager. It can read client inquiry, understand what the client is asking, pull information from approved internal sources, summarize the issue, and suggest a response for the service team or the relationship. This is helpful because client inquiries often require coordination across different teams. The AI can reduce back and forth by identifying what information is needed, who needs to be involved, and what to do in the next step. For example, if a client asks about what about the status of the onboarding request, the agent could check the current stage, identify missing document, and draft an update for the client. This would also help the relationship or the service team to respond faster while still reviewing the message before it goes out. Overall, the value of agentic AI in transaction banking is that it can help move from reactive process to a more proactive, intelligent workflows. For payments, it can help identify issues earlier. For investigation, it could help find the root cause faster. For client inquiries, it could help teams respond more clearly and quickly. The key message is that agentic AI is not just for automation, it's about helping people make better decisions faster. It gives teams better information, clearer summaries, and recommended next steps so that they can focus more on solving problems and supporting clients. Now I will ask my teammate Miriam to talk about liquidity management and treasury operations.
So agentic AI can support transaction banking by turning treasury from a mostly reactive function into a proactive decision and action layer for liquidity and treasury operations. So in liquidity management and treasury operations, agentic AI can track cash positions across accounts in real time, identify surpluses and shortfalls, update forecasts as new data arrives. It can also recommend or execute internal transfers, short-term borrowing, or investment moves to keep liquidity within target ranges and avoid excess cash. Research found that AI agents could maintain precautionary liquidity buffers, prioritize urgent payments, and balance liquidity costs against settlement delay. This makes it useful for bank treasuries handling high volume flows, cut-off timing pressure, and payment queuing decisions. In practice, a bank's treasury or transaction banking unit could deploy agents for workflows such as intraday liquidity management and buffer optimization. For example, in this workflow, an AI agent would evaluate incoming and outgoing payments, expected funding, stress scenarios, then recommend the least disruptive action. A second workflow can be cash positioning and forecasting, where AI agents can pull data from a bank's payment system, bank accounts, and market feeds to produce more current cash views and scenario-based forecasts. A third workflow scenario is for payment deferral decisions. In liquidity shocks, an AI agent can rank payments by urgency and preserve settlement capacity for critical payments only. And a fourth workflow is for reconciliation and controls, where an AI agent can match statements to ledgers, drafts explanations for breaks, and route unresolved items to humans with evidence attached who can then make a decision. And the fifth workflow example is for AI-enabled treasury interfaces, where treasury users can ask for current cash, tomorrow's funding need, and policy exception all in one request to get an immediate response instead of navigating multiple systems. So where does agentic AI help the most in payments and liquidity operations? The biggest value tends to come from high-frequency rules, rule-based decisions that still need human judgment, such as intraday funding decisions, payments prioritization, cash concentration and sweeping, short-term investment allocation, exception handling for fraud and compliance triage. Overall, agentic AI can reduce manual work by continuously ingesting, validating, and reconciling data, which improves forecasts freshness and lowers operational errors. For a transaction bank, this can translate into better client liquidity visibility, faster responses, and more scalable treasury services. Natalie, could you tell us more about how agentic AI can help in trade finance and deal origination?
Thanks, Miriam. So trade finance has historically lagged behind when it comes to technology. And while promissory notes written on clay tablets is no longer the norm, some would argue that the industry hasn't changed all that much since. Developments like OCR and the Electronic Trade Documents Act have signalled that the industry is moving in the right direction. But those alone will not be able to solve for true end-to-end automation. I want you to think for a second about all of the manual tasks that a human has to do when processing a trade instrument. Document checking, negotiating wording, checking limit availability. Now imagine an AI agent can do all of this completely autonomously. And it works around the clock, 7 days a week, on multiple tasks at once with minimum human intervention. This could, of course, bring huge benefits, including improved consistency and accuracy, as well as reducing the amount of manual tasks that humans have to do, meaning they can spend more of their time on more value-add activities. But the most material benefit is likely to be in speed. Having an AI agent can significantly reduce the time taken to process a trade instrument. This means that 1, higher volumes and lower quanta can be catered for, meaning that smaller companies can access trade finance, helping to bridge the trade finance gap. And secondly, to help streamline global trade overall by making sure that trade finance is not a blocker for global commerce. Another area we looked at was capital efficiency. Now, this has attracted a lot of attention over recent years, with both banks and corporates alike looking to optimise and ensure efficient use of their balance sheets. And this area impacts other areas of banking as well, but transaction banking products such as receivables finance, for example, can make capital efficiency particularly challenging. This is due to the higher instances of low utilisation throughout the cycle, followed by huge drawdowns at quarter ends. However, an AI agent can completely reinvent the way that banks manage their capital for trade products by leveraging data and intelligent automation to drive dynamic limit management. To enable this, an AI agent would, 1, forecast limits required accurately based on historic patterns and current market conditions, And 2, tracking utilisation constantly, matching limit allocation to actual utilisation. This helps to ensure that sufficient capital remains in place for clients to use when they need it, without requiring banks to hold huge limits that remain largely unutilised until peak times. Overall, this helps to ensure that banks' capital is used efficiently, making seasonal trade products work for both banks and their clients. And finally, deal discovery and execution. So for a lot of originators, time for proactive sales can be limited. But think about Agentic AI as your ideal origination co-pilot. Imagine every time your prospect releases their quarterly report, you get an analysis into the latest working capital position and product recommendations without lifting a finger. Imagine receiving opportunities for local currencies based on SWIFT and settlement data without any prompting. An AI agent could do all of this, making you well informed about your clients' moves and potential opportunities off the back of that, in addition to ensuring that your product recommendations are hyper relevant for your clients. And it doesn't stop there. For example, when a bank receives an RFP, an AI agent can get to work by assessing the bid or no bid decision by looking at things like geographic coverage or strategy alignment, etc., while also actually then going on to formulate those RFP responses completely autonomously. Additionally, for live transactions, an AI agent could create and manage a deal checklist to monitor deal progress, providing on-demand updates for key stakeholders, while also providing reminders to key detail members to ensure that the deal stays on track. Overall, Agentic AI can help originators be hyper-intentional in their actions, helping to ensure that the solutions that they propose are based on the environments their clients are operating in real time. So those are our top use cases, but there are, of course, some considerations. Marvin, could you tell us more?
Thank you, Natalie. So we've just seen some truly compelling use cases, from compliance monitoring to trade finance processing to liquidity management. And as we know, with Agentic AI, the potential is real, especially in banks and organizations like ours. But before we end this presentation, I want to take a moment to talk about what it takes actually to get there and what we should keep in front of mind as an industry. So for the considerations, let's start with our survey and what Pepita mentioned. Most of the answers flagged loss of human accountability as a key concern. And right behind that, data confidentiality and accuracy. These fears are not irrational. They reflect the reality actually of working in a highly regulated environment where mistakes have huge consequences. And we also heard concern about regulatory uncertainty. And the EU AI Act is leading the way, but in most markets, the rules are still being written. For institutions that operate across borders, we need to build systems that are not just compliant today, but also adaptable to whatever framework comes next. And here is where I want to share a personal conviction. Agentic AI, it's a tremendous tool. We agree on that. One of the most significant we've seen in our industry so far. But the thing is that it is just a tool, and again, it will not replace the people in this call or even the judgment that a compliance officer applies to a complex case, or the relationship instinct that brings a banker to a client conversation. What it will do, and that's what we need to do actually, if we deploy it correctly, is free us from the repetitive manual tasks that consume too much of our time, so that we can focus at least on the work that truly requires human expertise. So how do we get this right? Our research points to a few key principles. First, human oversight. And I already saw questions, I think it's from Kat. So that's how we do to keep the human in the loop. It's very important. So when we ask practitioners what would make them comfortable using Agentic AI, the number one answer was actually this: human oversight and validation. Keep human in the loop for high-risk decisions, and use shadow learning programs so that your teams build intuition about how the system behave before they go live. Second, governance and regulation. We need a clear framework, not just from regulators, but also internally, directly from the banks or any institution using Agentic AI. We need to define what an agent can and cannot do. And of course, maintain full audit trails to make sure that AI is not doing any decision by itself without any review after that. If you cannot explain a decision to a regulator, you should not deploy it. Third, invest in your people. This is not about workforce reduction. This is about workforce readiness. More than half of our respondents cited adequate training should be mandatory in the organization for the use of agentic AI. The institutions that succeed will be those that treat AI as adoption, as a change management challenge, not just a technology project. And fourth, we definitely need collaboration. No single bank will solve this alone. The work we are doing here at BAF actually, gathering people together to work on projects like this is really what our industry needs. To wrap up, agentic AI, it's not coming. It's here. The question is not whether to adopt it, but how to adopt it responsibly. Start with narrow, domain-specific agent, keep human at the center, build governance before you build that scale, and remember that at the heart of transaction banking are people. And this is us, actually. The technology should serve us and not the other way around. So thank you for the presentation. Maybe I'll pass it on to Omar. I think you had a few questions to.
Yeah, thanks for that, Marvin. Thanks everyone for all your important talks. I guess I'm just going to go back to all my team members here. And one word, what comes to your mind when you think about agentic AI? Helen, if I could ask you.
Yes, for me, I think it will be agile.
Very nice. Pepita? Well,
I think she's
Pepita can hear. Okay, Patrick, maybe we could come back to Pepita. Patrick, what is one word that comes to your mind?
I would say accelerator.
Very nice. Miriam?
I would say scale.
Very nice. Marvin?
I would say autonomous.
Very nice. And Rita, I don't know if you can still hear us. Okay.
I think Pepita might be having some issues, but I can step in. So my word would be transformational.
Thank you. Natalie? For me, it would be proactive. An agent that's always there for you 24/7 doing the job and assisting human being the main decision maker. So thanks very much, everyone. Now we'll go to Slido for some questions. So, Daniel, I believe you might have this Slido in front of you.
No, there's no Slido. You have the questions. You have to open up the Q&A. You'll be able to see the questions.
Okay.
So there are about 10 questions asked.
Okay, if you're okay with, I saw a question that I would be interested to answer. The question is about like what's the biggest concern for agentic AI now, and I remember that in our paper we talked about agent sprawl and what can we elaborate a little bit more about what does it mean and what's the solution for now. I would be happy to take that question. So I guess one of the urgent and biggest concern or rising concern is the agent sprawl. Agent sprawl is the uncontrolled proliferation of AI agent that across an organization without centralized visibility or governance. It happens when isolated business units independently build and deploy autonomous agent, leading to a conflicting or forgotten agent and causing redundant workflow with computing costs and fragmented data permission. It's because due to the nature of agentic AI that can read, write, and execute, especially thinking about the permission that we're granting to agentic AI. A single prompt injection attack can allow an agent to alter data, bypass security checks, and trigger unauthorized workflows. This risk is moving beyond simple data leakage to a compromised business process. So that's the definition about agent sprawl. So what's the solution for now? A general solution is to develop a system of agentic architecture to centralize control and inventory management over uncoordinated and autonomous agents. And to mitigate the risk of unintended actions, there is an emphasis on agentic governance or human on-the-loop models. And in this framework, the AI operates autonomously through complicated task cycles. But for the critical part, well, it has to report to human supervisors that manage the critical exception gates to ensure that the safety guardrail remains robust as AI is doing all the simulated sophisticated human behaviors and interactions. And I hope that answers the question.
I can take the next question. So that the question in the chat was, what do you think corporates will want first from banks in terms of agentic AI? Will they get the banks to apply in compliance first? So I would say that there's two areas that I would see more demand for. I would definitely agree that compliance would be a primary one. I think anyone on this call that's in a client-facing role or in the compliance space definitely understands, or has seen frustrations with clients. If they have a payment, or especially if it's very important. Think of a company that's doing a very important acquisition. You want that payment to go through quickly. So, I think anytime that you can speed up the compliance screening process, it's great. Of course, you want to make sure that you're still doing, the proper regulatory, requirements and meeting those, just because that is so important in our industry. But beyond that, I think secondary, Omar talked a little bit about payments and payment routing. I think that's another great space, being able to leverage an AI agent to make sure that a payment gets, from the originating bank to the beneficiary bank as quickly and efficiently as possible. So, instead of having to route through multiple intermediaries where, a client's going to have deducts, other fees or, currency conversions, for example, being able to get payment from point A to point B as quickly and efficiently as possible, I think will be key. And just overall, both for the compliance and payment routing, just provides a better client experience, which is crucial in our industry. We want to, make revenue as bankers unless we had, those clients and those deposits. So I think it's key, when you implement these ideas, really focusing on the customer first. And seeing how we can prioritize that rollout.
Thanks, Patrick. I can't really see the question, so if anybody else wants to take any other question, please go ahead. And Pepita, I don't know if you can hear us back. We were waiting for your one word. Oh, you still can't have your mic issues. Okay, all right. Marvin, is there any other question that you would like to answer or tally?
So yes. Oh, please go on, Tally.
You go for it, Marvin.
Oh, ladies first.
Thank you. There was one here. I'm just trying to find. There was one on trade finance. So, question for the Q&A section, please. Theoretically, agentic AI has many benefits to trade operations. However, I feel like a lot could also go wrong. What are the panel's views on this, please? It's a very good question, and to be honest, in terms of a lot can go wrong, it could apply to all of our use cases, across the board. There's huge benefits to be realised, but it's got to be with the right controls. So from a trade ops standpoint, there's a few risks that have to be considered, absolutely. So the first one that pops to mind is around the complexity of trade transactions. It requires human experts right now, and that's not going to change with the rollout of agentic AI. People's jobs are just going to look slightly differently with agentic AI, sort of with humans focusing on those high-risk cases. There's also the challenges around integration with legacy systems. I know that's always a challenge for banks that use multiple different systems. So, for example, like I mentioned earlier, from a trade ops standpoint, if the agent has to check what the limit of availability is, if the agent doesn't have access to the system or platform that your bank uses to track, a current exposure against the limit, then the agent's not going to be able to do its job. So that's a considered integration. Absolutely has to be considered when rolling out agentic AI. But I guess overall, it's one of those things that's not going to happen overnight, and neither should it, because Agentic AI is a very powerful tool that should be rolled out gradually and with the right guardrails in place. So I hope that answers the question.
Thanks for that, Natalie. Okay, Marvin.
Yeah, so the question I wanted to take is so let me see the questions. I think it's the one from Kat. Actually, I answered during the when I was speaking. So, any best practice for organizations to monitor AI inputs to ensure that they are correct? So, as I said in the conclusion, I would say that the most important is to keep human in the loop for high-risk decisions, because of course we cannot rely 100% on a robot doing everything by itself. So, I'll make it short because I think we also a bit running out of time. So, and again, I hope you enjoy the presentation.
Alrighty, so thanks very much for that. Since we are at time, everyone, we'd like to thank everybody's time and their patience with us for being for 45 minutes. Please send any of your questions to the BAF team. We could definitely chime in and respond via email. Stay tuned for the next coming, BAF meetings for the next coming days. So see you guys then.
Thank you, team. Thank you.